Okay, mic check. Should be able to see the screen here. Mr. Blue here, TradePhantoms.com. Good morning, good morning. All right, cool. Let's dive in. Check. Today's date, Tuesday, February 11th, 2025. Hopefully everybody had a good weekend, new week. I'll get this thing to stop moving here. And I'm going to go over about an hour, give or take, of some pre-market prep, mainly futures and options. And so let's dive in. A little crooked, but I think we got it all right here. All right. I'm going to use Thinkorswim. I'm going to pop up Thinkorswim here in a moment. And we'll check futures. But before I do that, did want to just make a note or two here regarding the news that's coming up. So today's Tuesday. Hope that focuses in. Why is it so blurry? Focusing in, we do have 10 a.m. Eastern Fed Chair Powell speaking. So that's something that you want to be put a note towards for today, for sure, 10 a.m. Eastern. All right, so, just speaking, semi-annual report, the banking committee in Washington, D.C. So, he's just speaking. It's, just a report. We got Trump speaking to the president here. That's not a time on that. Wednesday, we do have, tomorrow being a major thing there, core CPI. So that's a major one for the for the week. For the week. Also, he's speaking again next week, tomorrow as well, Fed chair. So again, just kind of laying out the week a little bit there. Tomorrow, CPI is going to be a big one there. And other than that, with Jay Powell speaking, unemployment claims come out every Thursday. So that's pretty normal there. All right, nothing too crazy. So we get to Thinkorswim, and we always want to start from the higher time frames first and foremost. So monthly, weekly, daily. See if I can zoom this up a little bit here. So I usually bring up the form that I usually have for kind of a checklist. All right, but the S&P futures, I'm going to start here. All right, well, let me start with the major four indexes, I should say. So I have the daily time frame here on the upper left of the S&P futures. NASDAQ upper right, Dow Jones lower left, and I got the Russell 2000 bottom right. I'll pop up in the S&P futures here on the 1 hour time frame, daily time frame. And real quick, regarding this week, I've been talking a lot. You can maybe rewind some past recordings. I'm not going to go through all the way through the past here, but long story short, if I kind of zoom in a bit more here on this chart, S&Ps, NASDAQ are still inside of this range here, right? So we, beginning of the new year, we had a couple of gap downs, deep sea gap down, we faded up, okay? Another gap down, tariff talk, we faded up. This week, we, again, slightly gapped down a little bit, from yesterday's open, okay? So from Sunday evening, we have, Friday's close here, okay, on the Friday candle 2-7, okay? Then we gapped down slightly to begin the week. And yesterday was another little fade day higher. Okay. Long story short, right now is we haven't really made any movement, up or down with any, I'd say follow through, right? So, just be courteous of where we are on the higher time frames. All right. I'll bring up SPY and QQQs is the ETF as well. All right. So just make sure you're mapping out your last week's high, last week's low, so on and so forth. All right. Yesterday's high, yesterday's low. I'll get to this in a moment, but as you can see, SPYs are, SPYs are gapping down slightly here right now, still inside of Friday's bar. Friday's bar was a nice little red bar that got put in. Okay, we were talking about this. I know I kind of rabbit hole down into from futures, went directly to SPY, but did want to just make a note because this chart's a little more cleaner, where you can probably see a bit of the candles. All right, but yeah, we have this. We have these two, massive red bars that got put in. Ironically, Friday, January 31st, and then another Friday, which was last week, the first week of February, the 7th, Friday the 7th. Down, fading higher, but just could not hold any prices up here so far. This is the all-time high in SPY, which was put in Friday, January 24th, which is, 610.86. All right, so we've been trying to, flirting with that level, but, we have not had a nice sustained close above there. Okay, so we'll see. All right, we have some open space lower down here too, potentially, 576s. So, as mentioned for quite some time now, I've been mentioning to the team, here's the new year, right? 225. January 2nd, right, of 2025. And, so far we've been, we've been up, down, went up, down, up, down. So pretty much rangy for the most part right now, as mentioned. All right, getting back to the futures market, there's a bunch of lines here. I'm going to delete these, but these were, this was from Friday. I made my trading day more difficult than what I needed it to be. But that was Friday, just moving on. NASDAQ, so I'll delete those lines. You'll be able to see the prices a bit better in a moment. But NASDAQ on a daily time frame as well, you can see very rangy, right? Very rangy, very rangy. Here's the current price over here. And, same thing, right? So as far as really no advancement higher, no advancement lower, a lot of these levels below have been tested. Okay, a lot of the levels above have been tested as well. NASDAQ comes in all-time high, 22,450. All right, so we'll see. We're going to drop down to the smaller time frames. As you'll notice in a moment, we'll map out what's called our Globex traps. Okay, and, stick to the process, right? Stick to the process. So far, futures are down. All right, so we got the NASDAQ down 0.74, S&P 0.46, Dow Jones 0.30, and we got Russell 2000 down 0.8. So just under 1% for across the board for most of the major four indexes. And I'll switch over to the darker background, which I'm sure will probably be a lot better to see. All right, so just to give some folks of the on YouTube lay of the land here, the layout got monthly time frame on the left, weekly in the middle, daily on the right. So we always talk about demand supply, institutional demand supply levels. Okay, it's starting with the top down approach, monthly, weekly, daily. So even though we are maybe you could drop down to the small time frames and day trade, you still want to know where you are location wise on those said higher time frames. All right, so I will switch over to the smaller time frames, however, and I will of course start with the S&P futures. And I got the 60-minute time frame here on the upper left. I got the 30-minute time frame here on the bottom left, followed by the 5-minute here in the middle, and then the 2-minute time frame here on the bottom right, the right hand side, and opening the 60-minute time frame. Let me clean this up a bit here. We want to do what's called what we want to do is map out our Globex highs, Globex lows. So this was Friday's stuff here. Let me just clean this up a bit here. This is not my main account here, but so it's going to take a moment, but I'll clean this up. All right, hopefully that kind of cleans the house up a bit there. That did not help with the blurriness. I have to call out the prices because y'all can't see that. That's annoying. All right, Globex high, representing the overnight high. This is the 60-minute time frame of the S&P futures. That price comes in at about, give or take, 60.88, rounding up 60.89. All right, that's the highest high that the overnight session had poked into. All right, in Thinkorswim, the gray space lets us know and highlights the overnight session. So it's kind of a bit more clear in that sense, in that regard. And we also have a Globex low. Looks like I deleted that line by mistake. So I'm going to create a blue line here that represents, put that down here, represents the Globex low for right now. All right, market's about to open in about 29 minutes. All right, so make a note here. All right, so Globex high, Globex low, overnight high, overnight low, and the setup, if you will, is if we break Globex low, do we have a here's current price? If we break Globex low, do we have a institutional level of demand below Globex low? And if I look down and left, all right, you can see we had, you might not be able to, well, hopefully you can see, but 60.50, that price point 60.50. This was a trade that we took on Friday in the live trade room. Okay, that worked out for a decent little bounce there. Okay, but getting just moving forward, as you can see, we had a gap down. Okay, we had a gap down. So this is a Sunday evening's gap down. And we gapped down into this level down in here that we had kind of marked off. Price point, give or take 60.32. And the gap down went down all the way down into 60.14. Again, this is S&P futures on a 1 hour time frame here is what you're looking at. Okay, so we had a gap down, and since the past 30 weeks, it's been doing that. Gapping down overnight, over the weekend, I should say, and then just kind of fading higher, right? Fading higher, and you can see yesterday, not to get too hindsight, but yesterday was just a kind of a slow, kind of grindy, inside day, nothing too special there. All right, but long story short here is, in the event that we come back down into this level here, I want to be a bit more conservative here and have the price point potentially come down here, call it 60.25. All right, you'll learn a lot more about how a level is scored, whether it's good or bad, institutional wise. And it's beyond the scope of the time that we have here today. Okay, but long story short, because this is not tested, because this is tested here, right? This was the level that we hit, again, on the gap down that we had mentioned. Okay, and so we're fading back up. So this is not prime or fresh anymore. Okay, so that comes in about 60.25. You can reference that point there. And again, so far the low for the week, which was Sunday night's gap down, okay, is about 60.14, as mentioned. So we can put a, we can reference this level of demand here. All right, G-trap long, but I will put an aggressive note on this. Aggressive meaning that it's not the greatest level in the world. So you might want to trade this, cautiously, okay? Cautiously there. There's another level right below there. I want to be careful with this one. This is just kind of an odd level that is just kind of hanging out there. The thing I do like about it is it's an even number at 6,000. It's just a psychological number, and it's developed overnight, so I want to be a little more careful with that. And so in the event that we break that and we come, there's another demand level right below that comes in at about call it 59.60. Okay, 59.60. All right, now that level is also not, I would say, prime or fresh. All right, I know there's a lot of lines here and so on and so forth, but I'm on a daily time frame here. If I pop up in this daily, you kind of zoom back a little bit here. All right, this 60, you might want to write this down, 59.60 handle in S&P futures, okay, is the impulse. There's an impulse basing impulse right here that got tested once, got tested twice. So this would be kind of, if you will, the third time test here, which is not typically great, okay, because typically the more times that a level has been tested, even though it's opposite of what the books is, represents that it's going to be stronger, based on the demand and supply equation, that's not the way it works. Okay, a lot more to that right now, but to explain that, but Mr. Black, if you ever catch him, on TikTok or on the lives, he kind of goes in a lot more detail on that right now. I want to continue with the pre-market prep for right now. The point that I'm trying to make is that, okay, if we do come down to this level, 59.60, that's something that, I'm going to be looking at, all right, but it's not super prime, all right. If that does snap, we'll come in down into January's lows, potentially down here, 59 tenths, all right, 58 tenths on the S&P, all right, futures. All right, so if we break Globex trap, if we break the Globex high here, and if I look up and left, we do have this level right here that I've been referencing called 61.31. Okay, that can be used as a Globex trap short. Now, if you're long or if you have any longs, this would be an area where we're going to be taking some profit. Okay, and I have a note there already, selling the exit, and then also could be a G trap short. Okay, now of course, some of y'all are probably looking at this level right here, which we can't ignore. That was Friday's high. All right, Friday's high, which is going to be also last week's high, right? So you want to reference that as well. That comes in S&P futures here at what price point? 61, rounding up and down, rounding up 61.24. All right, 61.24. That's the last week's high, aka Friday's high. Okay, so this could be used as a G trap short, Globex trap short. All right, again, price point 61.24, give or take, right up there. That's Friday's high. Could be a little bit of a liquidity sweep. NASDAQ did that last Friday. We broke last week's high real quick, boom, and then we slammed down in the afternoon. All right, so this is kind of the lay of the land for the most part for today, 61.24, 61.30. All right, again, 1 hour time frame here of the S&P futures. Here's current price. So if you rally up in there, TP some longs, potentially can take a Globex trap short coming in a supply. Furthermore, if we break Globex low and become lower, all right, I want to be careful with the 60.50. All right, actually, I'll just delete that. All right, we have 60.25, aggressive level right there, not prime, not fresh. All right, and then I got the 59.60 handles down here, 59.70, 59.60, the lower one down in here. All right, yes, we could reference that 6,000 price point there. I would not be surprised if they kind of snapped that, picked up some liquidity right below that, stopped some people out, get lower into the demand zone on the daily time frame. That's been, tested a couple times for a reaction up, okay, for a mean reversion up. All right, very range market right now. Okay, so how do you trade range? Be careful what's called diddling in the middle. All right, diddling in the middle here. Unfortunately, I hate to say it, some of my phantoms have already been, I'm probably kind of annoyed hearing me say this, but it just is what it is based on the context and location. We're still inside of, some ranges here, right? So we're still hanging out in the middle of this range, all right, overall. All right, for the most part, all right, for the most part, path of least resistance, of course, would be up because we're in a bull market. This is SPYs again. So again, we have last month's high up here in orange, last month's low demand down in here in orange. So it's going to be interesting to see how this market's going to navigate within this wide range space. All right, so just stay diligent. All right, and then we got we got green bars up, negative CFGs. All right, my phantoms will know kind of what that means, and then but just no follow through. All right, yeah, we've been gapping down over the weekends, but we've just been fading higher. All right, so anyways, I'll keep it moving for right now. Let's move on to NASDAQ. All right, so just be patient. All right, markets will break out, one way or the other at some point. All right, but other than that, you just gotta be patient on the on how everything irons out. Okay, NASDAQ futures, 1 hour time frame. Yeah, Stephen Gambino. Yeah. Just map out your supply demand levels. The challenge with this is that not really a lot of levels right now are fresh and prime. Meaning that we have to trade off of them, but I'm still trying to qualify to the best of the abilities through the scoring processes, right? So it's just range. That's all. It's normal for right now. All right, until further ado. All right, so Globex high here, 60-minute time frame. NASDAQ futures here. The gray space lets us know overnight high, overnight low, and there goes that blue line there high. There goes the blue line here low, representing that Globex high and Globex low. And long story short with NASDAQ is we had another level down in here. Okay, great. We were talking about this 21,485. Gap down over the weekend, as mentioned, similar to the S&P. We faded up. Okay, then we came up back here. Okay, 21,900. Okay, which we had a level as well. All right. So again, just mapping out, albeit the levels are not super awesome. Okay, but if you understand supply demand, so on and so forth, institutional supply demand, you can still potentially navigate these markets, right? So now, if we break Globex high, you might not be able to see the prices. 21,907. Okay, there's another level up here, 22,000. Call it 100. Okay, 22,100 up here as well. All right, that is higher up on the daily time frame here. Nasdaq did not make all-time high, as similar to the S&P in January. If we break Globex low, I want to be careful with these levels down in here. I will clean this up a little bit here. This is a level here, all right? And I'll put sorry, I have an aggressive note there if y'all can kind of make out what that is right there. All right, that comes in at 21,045. That's an aggressive level because it's been tested, okay? It's been tested. So when this got developed right here, creating that new high, it got tagged on the gap down on this evening, okay? Long story short here, these levels here are not great, really. Okay, so be careful with these. These are kind of grayed out. I'm on a 60-minute time frame. So if I went long story short lower down here, 21,050, 21,050. All right, that would be a bit better just in terms of location of the range. Okay, so this is representing low range. This is representing higher range. Okay, high range up here, low range down here. Okay, so long story short, I would write this down 21,050, and then we also have 20,850. Okay, 20,850. Okay, that would be just based on the context and condition that we're in right now. These are going to be demand zones, not prime, not fresh, so on and so forth. However, these demand zones are at the low range in terms of location. And I'll make this note bigger. All right, again, 21,050. Okay, 21,050. 20,800. All right. All right, and if I just reference where that is on the daily time frame here of NASDAQ, it's going to be hard to see because all the lines. So it's down here. All right, down in here. So it's been tested multiple times there. All right, but you can see just holding up location. Location. These demand zones down here are closer to the low range, as mentioned. Right, these supply zones up here closer to the upper range. All right, so we'll see. We're gonna potentially, if price action opens up a bit there. Green bar closed on yesterday being Monday, all right, but it was not a positive CFG. It just could not close above prior day's highs. All right, gold futures. Gold absolutely dominating. We got monthly, weekly, daily on gold up, 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 up. All right, and monthly, weekly, daily up. So, poking its head outside of 2 standard deviations on the monthly, weekly, and daily. Yesterday being Monday, gold, made a beautiful higher high. Just ripped up. Hopefully, y'all caught that. Okay, so my phantoms in the room. All right, and just sticking to the process here really briefly. We got 15 minutes before market opens. Just mapping out, staying diligent to our process. All right, you can see past work over here. All right, we have Globex prior Globex trap. Worked out pretty nice. 2864 price point. All right, got some levels down in here that I'm just kind of patiently waiting for some swings. All right, down in here in the 2700, 2750. Okay, area down here. Got a note right there, swing trade long. All right, but for right now today, just mapping out our Globex high, Globex low. Here's our Globex high. So even overnight gold, swiped out a nice little new higher high. All right, and then we have a Globex low, kind of about right there, give or take. And long story short with this, if we break Globex low, there's a level of demand right there. A lot of time spent there, developed overnight too. Now price just dipped down really quickly right down here, and ripped up. So I would still keep that note there, 28,064. Okay, not 28,000, 2,800, 2864. Okay, 2,864. Okay, I have an aggressive notation on that as well. This one right here is going to be a decent one if this were to hit 28,300. Okay, this is a good one here in regards to a potential Globex trap. All right, first day trade, G-trap. And it might even be pretty good here too, location-wise. It's okay for a swing trade. So 2830, all right, 2,830. All right, gold 2830 handle. That would be a decent, nice little impulse, decent little fresh level right there. I like the formation. The only thing that I don't like about it is developed overnight. All right, but gold being in a alignment, what we call alignment up, monthly, weekly, daily, up, 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 trend up, 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 okay? You know, you know, something like gold, you know, could come into even just a basic level of demand, not even super high quality, okay, and continuing to make higher highs, okay. So yeah, that's not bad. Here we got the 20 period moving average here in blue. I know y'all might not be able to see that, but that 2830, okay, you might want to write that down. That 2830 is also confluenced, okay, with the 20 period moving average on the daily time frame. Okay, we have a little bit of an impulse, a basing, and an impulse down here on daily, in addition to that as well. All right, now you might be saying to yourself, well, that we've been breaking this demand zone, and coming down here. Yes, that would be okay because this is a smaller time frame on the 60. We might be wanting to come down and rebalance higher up, you know, on a higher up time frame, being the daily time frame. All right, so I'll make a note there as well where we still have this line here. We can move on because I know it might be hard to see. Swing long entry. This is also confluenced. With 20 EMA on daily time frame. All right, 2830 handle, that impulse basing impulse. If you want the time of and date that this level was created, you can go look at February 3rd, about 6 a.m. Eastern time, okay? February 3rd, about 6 a.m. Eastern time, okay? Price point 2830 gold futures. All right, moving on. VIX. Volatility index of the S&P 500. Yesterday's high, yesterday's low here. And let me get my internals. Also, I'm going to map this out on the smaller time frames. This is VIX. I'm going to map out the overnight high in VIX, overnight low in VIX. And in short, VIX up, market down, VIX down, market up. There's a lot more to that, but just for right now, keeping it simple, typically map out what it would look like. Just pin it where the last time I looked at it, which is right here. VIX small time frame, it's just a gauge. All right, but it helps a lot. Okay, if I see VIX down, breaking the overnight, aka Globex low and sustaining down, that could be more bullish for the market. And vice versa, if the VIX rips up, remains above the overnight high, and trends higher, that could be a bit more bearish for the market. All right, to keep it simple for right now. All right, right now, the sectors, if you will, I got a bit of a short position on the XLY. It's one of the weaker sectors, and today, you know, capping down pretty decent. But right now, tech is not having a good day so far pre-market. Bit of a mortgage gap lower. This is the the S&P sectors here. I just like to get a look at what pre-market quotes are regarding those sectors. So there's only two sectors up right now: XLP pre-market, right, and energy right now. You know, obviously, if tech is not having a good day, that is going to be not so great for the Nasdaq and the S&P. But we'll see if that continues. SPY, in terms of the gap, I'm on a daily time frame. Just going over the gaps really briefly. Pre-market quote 60241. So yesterday's close here, outside gap down. However, this is not what's called the mother bar. Okay, the Friday's high and Friday's low, that massive red bar there, is the what's called mother bar. So this is an inside day yesterday. All we did was gap up and just meander around inside of yesterday's range. All right. So far today, we have an outside gap, albeit yes, okay, because we're gapping down below yesterday's low. However, okay, again, Friday's high, Friday's low is going to be more dominant because that is what's called the mother bar, okay? Qs, same thing. All right, yesterday's close, green bar, albeit yes. However, yes, Friday's high, Friday's low, that massive red bar there. That's, again, the mother bar there, right? Harami means pregnant in Japanese. All right, so this bar is inside of this bar, which is making this the mother, okay, the mother bar. All right, and, gap down, yes. Pre-market quote, QQQ's 525.74. All right, but we're inside of Friday's bar high, Friday's bar low, so you just gotta be patient. Dollar kind of meandering, doing what it wants to do. The dollar index here broke a yearly high. However, this candle right here is pretty interesting because of that massive wick on top of there. So it's gonna be very interesting to see. I haven't gone over the higher time frames with y'all on this dollar index, but last month's candle close was a bit of a doji. All right, so we have this thing called painting bars and trading the tape. All right, so this is what this would be the third week that we're kind of inside of this January 20th weekly bar here. Okay, and they already did a little bit of what's called a fakey breaky up here. So this is going to be pretty interesting. If I had a little more time, I'd go into that. All right, but right now, dollar is kind of sifting out kind of what it wants to do here for the new year. All right, but if we can't take out this bar high, it's going to be a bit more bearish. Okay, this level of demand has been tested a couple times, so it's going to be pretty interesting to see. I got a position on SDS. It's kind of like a hedge short for my portfolio. All right, I got Apple just on a daily time frame here. I'll go over FANG. FANG has more liquid options, so that's a bit of the heavier focus here. Yesterday's high here in blue, yesterday's low here. Also mapping out last week's high, last week's low. All right. So as far as Apple, it's if I scale out a little bit here, we had a nice little rip up end of the year. Okay, we'll pull back pretty hard, pretty decent. All right, on Apple, we have this monthly level right here, ripped up, had earnings. All right, and then we're kind of back down here. So Apple, again, like a lot of things here, a bit rangy. All right, a bit rangy. So just be careful. It's been inside this range of last week, February 2nd, last Tuesday. We really could not sustain higher. We really could not sustain lower as well. Right now, slight gap up, inside gap. But again, looking at where we are, current price right here. There's last month's low. There's last month's high, all the way up here. All right, again, we're kind of hovering in, somewhere in the middle of that, and then we're in the middle of that, in the middle of last week's range. So again, just be careful. Market's rangy right now. All right. Amazon post earnings, great. A couple days before earnings, made all-time highs. Gap down on earnings, nothing too crazy there. 4%, 5%. That's not that bad. Since then, Friday and yesterday, I should say inside day. Slight gap down. All right, that black line that you see right there is yearly VWAP. All right, that's still, of course, developing. So I'll keep that on. But right now, yeah, we're still on a higher high, higher low sequence on Amazon. It's one of the stronger ones within FANG for right now, even post earnings. But as far as the gap, we have a slight gap down. Again, inside gap, so nothing really sticking out there. AVGO, one of my favorites, but it's been acting, up, lately, just with the way the markets are, right? We have a gap up, it hasn't really done much post earnings, range. Then we had a gap down, and then we've just been kind of fading higher. But really no strong fall through, no big bars or anything like that. So, it's gradually going higher. But as you can see, it's been kind of, if you're day trading, kind of trickier price action, right? Up, down, up, down, up, down. So, just be careful today, slight gap down on this. There is a bit more alignment to the upside on this. Is trying to, trying to continue its, I would say rally if I'm looking at the higher time frames being the weekly here. All right. Still solid, decent uptrend here. All right. All right. If I look at the higher time frames, it's still strong. It's still solid. Still solid formation. Jason Rodriguez. Yeah, I actually have. I think they did a major update over this weekend, Jason Rodriguez. So, what I'd recommend is what I had to do in one of my computers. The older computer that I have that, this should not even be operating anymore. I had to uninstall and reinstall it, brother, on that computer. Maybe that will help. Like I had to uninstall Thinkorswim and then reinstall it. That might help. It helped one of my computers. I have several computers, but I had to do that on one of them. So hopefully that helps. It's kind of annoying, but I think they did like a major update over the weekend. Google post earnings. Pretty significant gap down, no big deal. Well, I shouldn't say big deal. It's okay, decent little gap down there. But again, if I go to the higher time frames on Google, we're still holding up slightly, right? So I got some sold puts on Google that expired last week that were good. I'll continue to do that. But as far as a gap, Google has been a little bit more weaker post earnings coming off of. It was ironic because it was more of the stronger ones going into earnings, but then after earnings, Friday had a nice little move down that some folks caught. But today we have another gap down on said Google here. Now this is an outside gap of yesterday's high, yesterday's low. However, saying the same thing here, but it just is what it is, where we still are inside of Friday's high, Friday's low in terms of price range, right? So still inside bar there. Tesla, hopefully I'll caught some Tesla. It's crazy. Tesla was short in the morning, came into weekly demand, okay, and then had a nice little bounce, but then later in the afternoon it continued. So I was doing crazy things in Tesla yesterday. I was long. I was short a little bit. Then I got long. Then I ended up cutting out of my longs and getting short later. Okay, I still have a couple of puts left on this, but we are coming down into this weekly level. So it's going to be interesting. This is the area location that I was kind of waiting for it to potentially get down into. All right, now we can come a little bit more deeper into the zone. We have a gap fill that's coming up into Tesla as well. So pre-market quote gap down. All right, I'd be careful with this now because now we have red bar, gap down, and we're coming into this gap fill here on Tesla. All right, so if I drill down as well, it's a daily gap fill. If I drill down, there's a bit of a basing impulse right below there as well. And there's another gap fill right there at 620. Okay, so there's an unfilled gap, 620. But the first one up here, which we're going to be probably filling off the open here, 340, 345-ish, right? So there's another unfilled gap here. That's going to, looks like, in the next 2-3 minutes on Tesla, gap down into there. All right. But there's two levels of, I would say, there's an impulse, a basing impulse, a prior 1, 2, 3 go right in there. That comes in at about 340. And then there's another little baby gap right there. Comes in at about 333. So I know it sounds crazy, but we have a bit of a novice gap coming down here today into some weekly level of demand. That I'm going to be using. All right, if we get down to 341, that might be not bad. That might be pretty decent for a bit of a bounce. Because if I'm short already, which I have some on left over from yesterday, which I should be taking some profit on right now, actually. I take some profit, some buy covers here, and then potentially some buy that enters for the bounce. I would like it if we get down to the 333. I'm trying to give y'all something that might be triggerable today. I'm just taking some profit on some of the Tesla puts that I have left on. All right, but that's yesterday's trade. I wasn't with y'all, so let me see. Let me definitely make a note here. set up an alert. At this 341 handle. All right, let me just take a quick peek at the internals here. Advanced declines a negative 1100. Extreme is positive negative 1800. Vol D slightly down. We'll continue to monitor VIX. All right, Microsoft is one of the weaker ones there. All right, Tesla is going to be really interesting at this level here. Come on, stop doing that. AMD. Some sold puts on that. So far, nothing really sticking out. We've been getting really selective coming out of the month of January. You should be selective anyways, but really patient, really selective. JP Morgan down, but it's one of the stronger ones. Financial sector. Apple looking good out the gate here for bullish. It's already taking out yesterday's high pretty significantly off the open. And if you want to talk about a wide range bar, that's definitely one that's being put in. All right, just remember we have news at 10, right? AM. All right, so if I look at potentially Apple here, long call, day trade. Let me see. You want to keep it lower risk, you may pick up the 235 strike. 235 strike on Apple long call. All right, you can lean against this bar here, wide range open. All right, this bar gets taken out, no fall through. All right, just get out, stop out. All right, so the 235 strike call, if you can make that out, they're going for about $1.30, $1.10 long call Apple day trade. You know, manage this aggressively. February 14th expiration this Friday. I got filled at 113 personally here. All right, lock that up if you can kind of make out what that sees there. All right. On call day trade. Stop loss 227.59. Which is probably going to be total premium risk. What you paid for that. Yes, if you're looking left, there's some supply here, so just Friday's high, so on and so forth. Last week's high too. This is a 1 hour time frame, right? So it comes in about what, 234 give or take. So this is where you're going to be TPing, taking some profit, right? Especially on a day trade. All right, especially with the conditions that we have as of late, meaning that it's been really tough to get some follow through on some trades. All right, so up there's going to be some TP, take some profit, take profit. 233 handle, 234 handle, give or take, right? 232 halves. All right, so we need some follow through on that. Microsoft, it's just hard to get short Microsoft as we're really down here in this low range. It's been tested a gazillion times, but it just has not broke, so it's hard to get short here. So I'm still working on Microsoft, long, but I wouldn't be surprised if this level snaps. But you can sell some puts. On this little gap down here, you can sell some puts on this. It's one of the ones that I've been doing quite often, right? Next monthly level down in here is 377. So if you phantoms that have been trained through the focus classes, you can sell some puts. Today's a decent day to do that on a down day here. AMD holding some bids. Good. I got sold puts on these too. 100 strike. Good. It's looking like it wants to get bullish for a day trade, but I'd be careful with this. AMD has been, you just get these inside moves, and then just either gaps up or just gaps down pretty big. But I'd probably just avoid that. Just be careful on this one. Just on the day trade side of things, we're still inside of, I think, last Wednesday's bar 2.5. So that one's going to be a little bit more of a trickier one. NVIDIA, on the other hand, would be a better thesis on here, as we're in monthly, weekly, daily, still up. And last week was a positive COG close. On last week's close was pretty decent. Adobe. Adobe looking good. Blessing. Adobe looking good. Adobe monthly level, hammer bar, last month's high, last month's low. Looking good for some alignment. Pro gap up slight on the weekly. Trying to clear and close above here. Apple so far no follow through. Not surprising a bit. Adobe. This might be even good for a swing trade on Adobe. Spread's kind of annoying. On this, if we go to April. Expensive stock, but you could trade the option on it. This is looking good. I can put my stop loss here. What does this look like on the weekly? I'll call it the 427 here. Has to be stop loss. We could price that out. If I pick up in April, what's my delta? If I pick up like a 35 delta, that'd be 495. Damn, that's way up there. Not quite. That's like monthly rebalance. It's not a bad trade here. We get stopped out at say 427 below this weekly level here. What does that look like? About $800 of risk per contract. If he got stopped out for the month of February, let's say it took that long, you're probably risking about $1,000, give or take. It's not bad. $1,500 for those long calls for the month of February. Strike price $495. Just a 34 delta, 35 delta. April 17th, 65 days out. $1,500. Not too bad. Not too bad. Reddit. RDDT, right? All right, Apple got a VWAP test. I'll be a little patient with y'all on the opening up risk. I'm not gonna be able to be here to manage everything with you folks here on YouTube at least, but in the trade rooms, of course, spend a lot of time on that. So Tesla's definitely on my radar. Adobe for sure. For the swing. It's a pretty decent one. Yeah, so Adobe trade looking good. It lines up pretty significant. I'm loving the way that we're already trading above last month's high, last month's low. A bit of a hammer bar coming out of some monthly demand here. So good find, blessing. That's a monthly. Last month's high here. Last month's low there. What type of COG should you be looking at for Tesla? There's only one type of COG. It's a green bar takeout red. If you know what a COG is, it's a COG. It's a green bar takeout red. But maybe we're only in we're in a weekly level. So to answer your question more streamlined, I would say I would love for it to be a positive COG on daily, but we would need at least minimum of 2-day pattern, a 2-day pattern. So you're not going to get that today, of course. But you would do what's called a front side entry. So front side entry today, limiting into that, and then you could maybe take positive COGs on like the 1 hour time frame as you front side entry, and then we'll see if we can get a positive COG on the daily potentially this week if it happens. So just break down the time frames. Of course, when we are in the focus classes, and typically advanced futures, I cover that a lot more in detail. So last month's high, last month's low, pretty decent right there on Adobe, and we're starting to break that out. And we're not done for the week. It's only Tuesday. However, hypothetically, and I don't like to speak in hypotheticals, but if we were to close this candle like this, this would be a nice positive COG on the weekly as well. But we're not done with that yet. Very, very early on that because it's only Tuesday morning. But looking good in the daily. Right, monthly, weekly, and the daily time frame here. we had red bar, range, of course, a couple of weeks inside bar. So we're finally starting to break and potentially close outside of that bar, which is good, weeklies. And then we have a red bar close on last Friday. Then we have a gap up, and a small little mortgage gap there. Not the greatest one in the world, but this is a pro gap up, green bar close, first close above a couple of weekly and daily highs here for the first time. And we'll see if we can get follow through. That's it. All right, stop loss on this. Adobe's expensive, right? Relatively speaking for folks, right? So stop loss, 427, maybe a couple of pennies below 427, which is going to be below this weekly, inside mother bar. All right, not bad there. If you're looking at the options, you want to get some time on this. All right, you want to buy some time. So I'm like in the April. I'm looking at the April. I'm going to price this out and figure out some risk on this. So stop loss 427. I got just a general target 595. Up here right now, but that's right here, filled gap. So at least want to at least target somewhere up here for right now. 200 pair moving average on daily as well. All right, but that's my time for now, folks. I'm not gonna really open up any more risk for you folks here. All right, not surprised one bit that Apple is potentially not following through. It's been the case for a couple of weeks now. Market's just been hard to follow through, so that's why I went low delta on this. All right, so focus on swings. Bought these at 113. Yeah, they're floating down to 70-something odd cents there. All right, no big deal. We get news at 10. All right, stop loss 227.59 down here. All right, I'll give it a little more space and room, but if we don't have a fall through one way or the other, I'm just going to get out. All right, everything's kind of meandering around. All right, so if you want to learn more about that, hit up TradePhantoms.com, click the register button there, and what's today? Today's Tuesday, right? So Thursday, February 13th, 7 p.m. Eastern Standard Time. It'll be a what is it? They call it like a workshop there. Put your name, email, get sent a link. About 90 minutes, give or take. Thursday, February 13th. There's an agenda right here for you, right? You can read that, how markets work. Mr. Green or Mr. Black will be hosting that. Either one of those two traders there. And everything, stocks, futures, forex, options, income, short-term trading, all the way to wealth management. Kind of a one-stop shop for everything, all right? Even crypto, right? Stocks, futures, forex, options, crypto, kind of everything there, right? If you like it, great, cool. If you don't like it, that's okay as well. Other than that, folks, I'm going to go. Make sure you understand that there's news coming in at 10 a.m. 10 a.m. Eastern Standard Time. And that being said, I'm going to, trade safe, be safe. Blue out.